All right. Good morning. Good morning, everybody. It's OpEx. We made it to the end of the week. Still anticipating a fade through the day today. Looks like the market is NVIDIA, and NVIDIA is taking a pause. We were expecting a little bit out of Japan last night. Really didn't see much of a change. See the US market's basically flat, waiting on data. Hong Kong right behind that, down 0.25%. Then Japan, UK, Europe farther down. I think everybody's just looking to get this OpEx over with. We're going to get late morning economic data instead of the 8:30 print like we normally would. It'll be 9:45 and 10 a.m. Not really expecting any offside surprises out of this, just needing to get it out of the way before we can start that weekend. So we can see high impact opportunity. The way this works is it gauges what's happened in the past and tries to anticipate, does this particular event have a history of being impactful and causing big moves? If it does, then it gets this bright dark red impact box. So we can see 9:45 this morning. You're going to want to be mindful of the time. Maybe dial back your position or just completely get out if you're day trading. Wait for this event to come through, then trade the results. It's been some strange flows this morning. If you're watching the 2-year and the dollar, a lot of times we want to see the 2-year and the Dixie, the dollar index, doing the same thing. And right now, the dollar and the ES both have this little cluster here. And the 2-year, which is this chart on the right, is sitting down at the lows, already at the lower ADR. So not really helpful at this point. Look for these two to change their structure as we get closer to that 9:45 print. See if we get a little bit of a hint. You'd be surprised at how often we get a warning or a tell from this before we get econ. So they're looking for a little bit of a fade here on manufacturing PMI. The prior was 51.3 and the forecast is 51. Markets don't like surprises. So if manufacturing is a high impact event, which it showed in that orange box, and it's expected to come in a little light, if it doesn't come in a little light, the market's really going to act on that. It'd be the surprise that we're looking for. Spot Gamma came out with their AM edition right before I started. So I really didn't get a chance to go through it yet. Just looking at it quickly, they have support at 54.50, resistance at 55.10 for the SPX. And they've got a put spread call out on the Qs. $55.71 still the call wall. That didn't change. There's now a combo level up here, or there might have been a combo level. It's just a lot of optionality. Those combo levels, don't let them be confusing. It's just a spot where there's a lot of options. Still can't use the market maker move, which is dangerous on a morning like this because we could have some econ that's big enough to warrant hedging, but we wouldn't even see the hedging because of all the rolling and everything. Now, we've talked about this rolling through the week different times. You can kind of get a feel for what's left. Looking at, you can see it's the last day of the June contracts. There's still a little bit of volume left in there. 12,000 contracts this morning, but really it's just about done. The problem is still can't use the market maker move for anything, trying to identify, are they hedging, not hedging? The central pivot panel is inside the previous day's channel, so no help there. It was interesting. I was looking at TradingView yesterday, and on Thinkorswim, it does not combine these 2 days. Yet I was telling you guys yesterday, treat all of this as if it was just one data point. On TradingView, if you was to have loaded a profile yesterday, a volume profile, it treated all of that as one trading session, one day. So it's really cool that the platform actually is smart enough to figure that out. Thinkorswim isn't, but I mean, it's all right. It's Thinkorswim. There's a couple of ways today can go. Quietly sideways into the close without a whimper, really just holding the levels without really doing anything. Maybe get, a little bit of volatility at 9:45, and then that's it. We just go into the weekend and it's a wrap. But if NVIDIA breaks down today, I think a lot of the market's going to break down today. And it's not like we're talking a flash crash with the ES down to, 53.50. We're not talking crazy stuff here. So this is a daily chart. Let's just go to a bigger one, maybe a clean one too. Yeah. So we got this gap that needs closed. This is the one that doesn't have the contract change. So adjust for that. All right. You love Thinkorswim. Oh, well, it'll be there. We'll just leave the weekly alone. With this gap, with this move, up into our current spot. We still got to think about the pure price method and what kind of pullback it would take before the market considers like a full set, 2 lower lows, 2 lower highs. So with this high that we got and the first pullback, we got to breach this pullback. The market has to fall all the way down here and break this before there's even any consideration of weakness. And that's a long ways off. We're talking, getting below, say, 54.50. And we'll just round up and say we're at 55.50. So a 100-point drop just to get to that point. And then we have to get underneath it just so that we can say we have a lower low. That's one side of the coin. On the other side of it, we still have to come back up and get a new high. Anything less, if we run up and fail to get a new high and roll over, then that'll be our first one, our first lower high. And we got this big candle, so we can use this. $55.25 line in the sand. It's the halfback. We need to maintain above that level, although we can wick through. We've got an example, say, back here, same thing. We had a breakout candle, 2 days of sideways. Another big breakout candle, a few days of sideways. It's the same thing, right? Just doing the same thing all over again. So we can get underneath that 50%, but we need to keep it and then continue the move. These moves have really been on the back of NVIDIA, that whole AI thing. If NVIDIA is going to finally take a break, call timeout, it's very likely that this shuts down this exuberant run that we've been getting. They were doing a lot of stats and seasonality today on Bloomberg, and I kind of like seasonality. It has insight to it. It definitely don't want to try to trade it, especially as a day trader, but just understanding how market dynamics work after the Fed quits raising rates, or when the Fed starts cutting rates, the seasonality behind that, or after we've had a bear market, what happens in the next 2 years after that. There's all sort of statistics that lay out all of these examples and scenarios that just continue to repeat over and over again. What I want to focus on, what I usually focus on, is how deep of a pullback are we looking at? Now, this last really big one, we were looking at a 5 to 7% pullback, because that's a nice, clean reset, nice wash. This is more of a minor pullback, and that would be the expectation at our current location. You want to measure the pullbacks, and you want to measure the leg up, the run. How far these runs go before they pause, and then how deep the pullback is, gives us insight into the strength of the current trend. Most of your textbooks will lay this out, giving you the idea that you want to measure this. So this is 7.67. And this is a 6%. So they're running 6 to 7%. It's good, it's fine, especially since the pullback that we had got here, this really good one, 6.5, closer to 7. But we don't have the pullback yet. It could be just a 2-day wonder like this. And we just continue the march to the upside. Or we could actually start to get something a little bit deeper, or it can be one of these. lot of bricks in the wall of worry. There's a lot of reasons to believe that it would be either this middle one or this bigger one here. But we don't have enough data yet. We don't even have a good trigger yet to consider that it's anything else other than these little minor 2-day pauses before it continues. But one thing that you're really going to want to watch for to help decide if it's one of these minor ones or one of these deeper ones is NVIDIA. So what it does today, going in the next week, that's really going to have a big impact going forward on what our expectations are for the market. Next week, all this issue with the weekly charts and the hang up that Thinkorswim has, it gets fixed usually after the first week. So next week, everything should be back to normal on it. So after yesterday's move, today's pivot point, it's a lot wider. We're outside of that very narrow band. And it really kind of highlights how narrow yesterday really was. You know, when we were talking about it, we were above the R2. And I was talking about how that really wasn't much of an accomplishment because of how narrow the entire structure was. Now we've got a much wider structure and we're not even near the S1, let alone beyond it. So if we come into the open and we're not below this S1 level, then it doesn't owe us that either. We could literally just spend the rest of the day within S and R1 and do nothing, which is really not much more than saying we could just sit inside of yesterday's range and do nothing. It was a really wide range and we haven't broke out of it yet this morning. I think if we do break out of it, though, we could have a nice expansion to the downside. We've got this other level. So that 52.26 to deal with, which is yesterday's low anyway. So it's the half back of this day. It's yesterday's low, double testing it in an H pattern. We've got a really good setup here. If we break this 55.26, then we take out 55.18, cog line 55.11, and we work on getting down to 5,500 with an overshoot of 54.92 cog line or this low down here. I like it. And we could easily do that in a day, no problem. We might ignore the market maker move from a hedging perspective. We don't want to look at it and think that they are hedging, but we can still use the market maker moves measurement, right? So if we take this ADR full, the yellow line down here, which is also on the cog line, 54.92 and the lower ADR, we want to subtract another 25 points from that. That would give us a downside range that would still be considered a normal day, a normal move in the market. We're not even looking at outlier events yet. You know, when we think about how far can the market go on a day-to-day basis? I mean, that's a trick question, right? Because markets can go as far as they want. It's kind of like saying, where does the elephant sit? Wherever the heck it wants. You're not going to stop it. But generally, markets behave in a structural fashion. It has distances that it's going to move, and every once in a while it might exceed that range a little bit, going from a 1 standard deviation to a 2, perhaps a 3. So we can take this lower ADR 54.92 cog line and we can subtract another 25 points from that. On the other side of this coin is the fact that we could run all the way up to 56 today, break out of that, and go up another 25 points beyond that. There's nothing saying that we can't turn bullish today, just that we're not likely to turn bullish today. NVIDIA is supposed to be a drag on the market. It's got a lot of expiring options. There was, and it's something you don't normally, at least I haven't normally heard. There was a little bit of talk about NVIDIA's ability to sustain this level of performance. It's the first time I've heard them starting to doubt that, really. I don't think there's any doubt there at all. I think they're just throwing shade, but the main thing is all the options value that's coming out of the market. So the expectation is sideways to weak, at least through the weekend, and then come in next week and see what NVIDIA's got up its sleeve from there. So we're not looking for a massive sell-off here, just a failure to really continue to rally. We've got an MDP. That's a missed daily pivot. We haven't hit it yet. And if you look at the trade flows this morning, they protected this low by front running it. Liquidity resides on the other side of the pivot. We would have expected the liquidity to be down here. And this way they'd have a really nice bear trap, right? We would break the low, go deeper than that low, get into the liquidity, trap all the bears, spring it, rip their heads off and run it to the upside. They didn't do that. Instead, they took a front run defending this low before we even got there. And that implies that it's going to happen again. We don't know if all the liquidity is done yet, right? And there's always still liquidity on the other side of the pivot, even if they do front run. So now we've got this lower high, but we don't yet have a lower low. And that's what has to change. That's what we have to breach. Once we do that, it's game on to the downside. If it's going to be a bear trap, they should get tangled up around 111, maybe get into the 1236. Then they'll flip it, spring it, and run it back the other direction. If it's not a bear trap and we continue to the downside, then we've got our measured moves lower. 54.92, that cog line, which lines us up over here. $54.92, measured move or ADR half. It's the same thing. We get the answer no matter how we approach this. It gives us the same destination. Beyond that, the measured move. And we get into 54.62, the other side. Now, if we want to use a smaller zone, then we can just measure our own Globex from the low of the session to the high of this session. And we can look for this to provide a little bit of a double bottom just from the low that we set here, rounding over and coming back down to this same low again, and then the measured move with the 111 and the 1236. %50 of that move is 55.14. It's really close to the 55.11 cog line, and then 5,500 round number. We get the same answers no matter how we approach this. Got some nice flows coming in. So everything looks bearish. I would caution that just keep in mind, we don't have to turn bearish. We don't have to turn bullish. We can go sideways into the rest of the day with this range that we've already got from our own Globex high to our own Globex low. This narrow range of 25 points, whatever it is, we could do this for the rest of the day. So, just kind of keep that in mind. Don't think that it owes us some really big move today, because it doesn't. I do like the idea of a breakdown, though, getting below 5,500, maybe challenging 54.75. I really like those, the odds of that, especially, NVIDIA and NASDAQ. If we're looking at something that could run, getting the NASDAQ down to the 10-day moving average I like that play. Got the dollar trying to break out from a 2-week, well, from last Friday's high. We're just sort of trying to hold these highs and digest a little bit on that 3-day. If we lose the 3-day, it's likely that we try to come back down to the 10. It's been doing a really good job of riding, staying away from that 10, but you know, unless it saves itself like it did back here on Tuesday and manages to get back above this 3-day moving average, it's likely that breaching it will give us a chance to test this 10 again. And we've got the 10-year under the 10, under the 3, inside day breakout from yesterday. Want to see it continue that, get a new low on the week. That'd be great. Get into that 4.2, get under that 4.2. We got this low from last Friday. Get that inside week breakout to the downside. It's just odd to see, the 10-year holding this low while we got the ES and the NASDAQ at yesterday's lows and the dollar up. So it's just a little funky right now. We are back underneath the call wall. It's very likely that we won't see it again, but if we do make a run to the upside, just keep that call wall in mind. Voodoo line 55.41. We're underneath that now. It's not a major one. It's what they call a forest level. Got a snow level down here at the volatility trigger and really close to the cog line. But other than that, there's really no major voodoo levels around. Ten-day, 30-minute volume profile. We're still looking at all of this point of control volume disappearing through the week and into next week. We're going to lose more of this volume. The question is, which one of these two are going to become the point of control? If we can hold in this zone into next week, this will become the new point of control. The problem is if we stay outside of it on either side, then this lower area is going to become the point of control. It still keeps it underneath us, which is fine. It's 5,500, somewhere around there. That'll be the new point of control. But if it does show up here, then we're going to have a point of control over our head. And it'll be at the high of a range, at the high of a run up. If you've done any profile work yet, and you think about the classic profile shapes like the P, you want to look at where the distribution is, where the point of control is in that. And the idea is that if you got it at the high, that becomes a significant major resistance level. It would be this massive point of control structure that we can get stuck underneath and continue to fade lower below it. We don't have a new point of control to add. We still have this old one from down here at 54.88. Oh yeah, that reminds me. Spot Gamma is now on TrendSpider. Got the email yesterday from TrendSpider that they have the indicator now added to their platform, which is pretty cool. So we do have the D from yesterday. It's actually two Ds. It's what the B-shaped profile is two Bs with the point of control in the lower section. That's now a level to keep your eye on for the day. Getting back above 55.45, say. This is where the weekly expected, the weekly pivot point is at. We don't talk about it too much, but actually this one's the monthly. No, that's the week. We don't talk about it too much, but the distance from that pivot point, the weekly pivot point, is something that you want to pay particular attention to. How far away we get from that weekly pivot point. I've tried to quantify this. I built an indicator that measured how far price was from the weekly pivot point. I thought it would be really insightful that it'd given me some sort of clue as to when we were topping out for the week. And it didn't. It wasn't a very good indicator at all. There was no insight there. The visual cue is better than the math on this. But how far from the pivot we get, and then whether or not we're able to continue after we set a really high distance from it. And we can see it time and time again where the market drives away from this pivot, stalls out, and then tries to go just a little bit more, and it just can't do it. Same thing here, big drive away, stalled out, and then it tried to retest a few more times and it just couldn't do it. So we've done that for the week. Here's the pivot, here's that high we were just talking about. Even if it tries to do another run, it's very unlikely that it's going to get it. It's a significant distance from the weekly pivot point. Now, there is some consideration on the anchored VWAP and how far away we are from it, but I mean that doesn't have any weight compared to how far away from the weekly pivot and even how far away we are from the 10-day moving average and the 10-week moving average. So looking at the 10-day, we're at about 0.6 and we're still on the decline after, being closer to that 1.5 kind of faded back. Just getting to the 10 and getting a little bit of a reset is healthy. It's good, especially after a nice run up, say 1.5. So I don't want to say that we're due, like it owes us a pullback to the 10, because that's kind of the wrong implication. I don't want to make it sound like we're destined to go there, but it would be a good thing. It'd be a healthy thing to get back to the 10, get a nice little reset. Even just getting near it, like we did back here where we would pull back near it and then, keep the run. And again, so it doesn't have to be a full reset, but a little bit of a pause here. And this is, for the year. I'm a little bit zoomed in. But we can see that average of about 1.5% above the 10. That's the sweet spot. And other than back here in April, where we got a little bit of weakness for 2 weeks, that nice pullback, that almost 7% pullback, that any other dip below the 10 lasted a day, maybe two, and we were back on the move again. We're already looking at next week's box. Just keep in mind that this box is not set in stone yet. All of these previous boxes they're locked. They're not going to move. Even our current week, it's locked in place and it won't move. But next week's box is not yet locked. This gray line is going to move as price moves up and down today. And as this gray line moves, so will its swings on each side. So those are going to continue to move until 4:15 tonight. Then they'll lock into place. The optionality structure won't change anymore. And I shouldn't say 4:15 because if it's SPX, then at 4:15 you could mark those levels out. For the ES, the options are still going to be open until the ES stops moving. So if you're marking out levels, say you don't have this indicator and you want to mark these levels out, wait until the futures market is closed tonight after 5, then go in and look at the levels and mark them out. And it'll be next Friday's options, this expected move here, plus and minus. But until the market closes, we can still preview what next week is going to look like, because the distance that we could move, this weekly expected move, derived based on volatility, gives us an idea of what the next week has in store for us. We can see that the week that we're in right now, this 4-day week, which was bigger than the previous week, by the way, even though it was a 4-day week, there was way more volatility priced into this current week that we had compared to last week, which was an FOMC week. Next week is even bigger. They are projecting some high volatility levels into next week. Now, what's on the docket next week to account for all of this volatility? Good question. But this isn't set in stone. So through the day today, we could see it narrow quite a bit. We could also, of course, see it expand even farther. This is still, at the end of the day, just a 1 standard deviation move, though. So, if you wanted to add that, just add it. You could cheat. It's not a perfect standard deviation, but you could just take the distance by half and just set it up there. Again, that's not a clean standard deviation, but it would get you closer to your mark. I still say this isn't the time for iron condors, those weekly iron. It looks like we're going to close in the box this week, but we're still breaking the box by the end of the week more than we should be. So your weekly iron condors, they're still a bad idea, and we're not getting paid enough. The condors are so wide that there's almost no credit in there. And then, of course, if there's no credit, then it's all risk, and it only takes one of those as a max loss to wipe out months of minor gains. So I still say avoid the weekly iron condor at this point. I mean, you can run weekly butterflies. They're really cheap. So, they have a great payout. They're really cheap. .9% above the 10-week. So we're just about as far away as we want to get. And you can see we've been farther than that before. But if we kind of take away some of that COVID run and look at things beyond that, then 3.9 is just about as much as you want to see. Few times when we've popped above that. But that's about it. So the question of have we run too far too fast, and does it owe us a pullback? We've run far and fast, and maybe it doesn't owe us a pullback, but all it has to do is pause here, and that 10-week will get caught up to us on its own. We don't have to go looking for it. It's been a fast run, and it makes sense to digest, especially with everything with NVIDIA and all that. Amazon considers a monthly fee for a revamped Alexa AI. That's interesting. That news just hit. looking at what's moving today, we've got Bitcoin down, semiconductors, China ADRs all down. And for what's up, the fangs. Oh, the negative fangs. That's it. Nothing else is up. We've got some that are close to being up enough. Biotechnology could go a little bit more, and gold miners, if it was to move up just a little bit more, that would meet our qualifications, but otherwise not there. So pot stocks and gold miners, semiconductors, I mean, they're really close. They're right there. Everybody be careful, be safe, have a good weekend. I'll see y'all next week.